Hey guys, Akil Stokes here. Welcome back to another day trading step-by-step walkthrough. Before we get started, if you want to see the higher time frame analysis of this trading opportunity, make sure you go back and watch the video titled Trading Elections, What to Look Out For. All right, hope you enjoy. All right, so here in the 15, again, it's going to be simple and boring, but if you are a breakout trader, right, we'll look at a few ways to do this. A breakout trader, so let's say you're someone that trades. Obviously, if you trade a breakout aggressively on the sell stop, you're filled right away. You're filled on the way down. Another option is waiting for the confirmed breakouts. That's going to be this red candle right here, right? Breaking close below. So if you're someone that's entering on this confirmation, again, I don't personally trade breakouts, but that doesn't mean it's not a bad thing. It actually is something I want to add to my arsenal. I just haven't been able to do so yet. But if you're trading for a move down to 167s, right, or right above, a good stop loss is going to be right above the entry candle, right? You can even get away with having a stop loss above the spike. This would be the safest area right here. You guys see this little pullback here? This level of structure that was created, we came here, we bounced up, lower low, lower close, we bounced up again, right? You can have your stop above this level. That's going to be the safest place to go and still have a very quality risk reward. If you're more aggressive, right, and typically traditional breakout traders, when they bank on a breakout, they bank on the market never coming back against them. So they're comfortable having their stop loss, say, above the entry candle. That's a quality risk reward. Would you guys not agree? Almost a 2.5 to 1. That's pretty darn good, right? Can you see why breakout trading has interested me? That's not bad. Now, another option, again, staying on the 15 or going to the 5-minute chart, is looking for the pullback trade. This is how I personally get involved in trades, looking for pullbacks. So we have this breakout. Don't want that. We have this breakout. We look for a pullback, right? We have another nice structure shelf. And this is why I would love to see the range bar charts, because this right here, this single candle and this wick up here, that is going to look like this on a range bar chart. That is going to present its own structure shelf, its own pullback, right? Which would be an ideal place to put stops above. So again, we get a pullback, who knows where it would be, but let's say to the middle of this zone. This is a nice level that we can get stops above right here on a range chart, right? 167.64, maybe 74s. I'd probably be using an 8 range, so it'd be 72s, but who knows, right? And then looking for that move, same targets. Target doesn't change. 167, 167 even down here. And it looks like we may even have some Fibonacci confluence with the 1618. If again, we don't know the retracement point yet, but if we were to retrace right here, swing high to swing low, and back up, you got a 1618 Fibonacci extension down here at 167.06. So good trading opportunity. A little bit bummed that I got a data issue right now going on on my Ninja Trader. But this is a decent trading opportunity. Hopefully this showed different ways that you can attack it, right? Aggressive breakout with the sell stop. Conservative breakout, waiting for the confirmed break and close, right? Next is the pullback. And as you go on your trading journey, right, not necessarily saying you need to use these in orders, but we know that good moves, good opportunities don't come too often, or at least you will learn that as you get more experience in the market. When you first start trading the market, everything looks good, everything's a great opportunity, and then you realize, like, man, half these opportunities suck and they're not actually good. And you have only a handful of good trading opportunities. Now, the difference is that, and with those good trading opportunities, it's very rare that you actually get an opportunity to trade, right? Especially if you only have one way of getting involved. So the ideal scenario that you are able to create as you grow as a trader is have multiple ways to get involved, right? Your primary reason, if that doesn't work, your secondary reason, if that doesn't work, your third reason, if that doesn't work, then you're probably SOL, right? You're out of luck, to keep it clean. But you want to have different ways to attack the market. So let's say you are a breakout trader in this scenario, and maybe you miss it, right? Maybe the risk reward doesn't fit your favor. So what you do is you say, okay, well, that was my primary reason of getting involved. Boom, that didn't work for whatever reason. My secondary reason, look for a pullback, maybe I get another opportunity there. And the cool thing about the range bar charts is typically you're going to get more of those pullbacks than your traditional time-based charts. So on a 5-minute chart, maybe you get 2 pullbacks before we ultimately get to 167, right? On a range bar chart, because it measures or plots the movement a little bit differently, maybe we get multiple pullbacks. All right, guys, I want to pop in for a quick update. As you remember, we're checking out the pound yen. We're down here on the 15-minute chart. When we ended the live room session, we were still looking for a pullback and the opportunity for a bearish continuation down. You can see price action has pulled back over the last 4 candles or so. And now we're looking for really the end of this pullback period of relief and a chance to catch the extension down. So no entry signal yet. Disregard this little risk reward thing. That was just us kind of measuring out to see if this was a tradable opportunity. Something positive that we do have is we do have some hidden divergence. So you can see that we have put in currently what is a lower high, but we have higher highs on our RSI. And typically this is a positive signal for a continuation trade. So we'll keep tracking on this. I got to head out to vote, but I'll come back and we'll see how this thing plays out. All right, just got back home, officially voted, did my duty, and look what happened. Ran up nicely, got that nice pin bar, right? Rejection candle up here, lower low, lower close. We've come down to retest previous structure lows right there. For some of you guys, that may be a target one. For others, we're now looking for price action to violate this level and extend down to that 1618 Fibonacci extension or that 167 even handle that we spoke about. So good trade so far. We'll see if we can progress and get either secondary targets or a break of structure completed, and I'll be back. All right, guys, back one more time. You can see we did not get our follow through, did not break below that current level of structure. In fact, just the opposite. Price was rejected after it, and we saw a big move to the upside. I didn't have a chance to check the news feed and see if anything specifically triggered this, but you're out for a break-even trade, or if stops weren't rolled to break even for some reason, out for a loss here. But regardless, another good example of a day trade. Again, if you've been following these day trading videos, the idea isn't just to show you wins and handpick them, because that doesn't really help you as a trader. It's to show you realistic opportunities, both winners, both losers, and just get an opportunity, get the reps of seeing what it looks like to take or find high quality trading opportunities. As always, before you head out, do me a favor, subscribe if you're not already to the channel. And if you are, hit that like button. And I hope you've signed up for our upcoming workshop. It starts November 14th. That's next Monday. It is a free 4-day online trading workshop. It's going to be awesome. You have to register even if you can't make it live. That way you can get sent the link to the recordings after each day is complete. So head over to www.tier1trading.com or click the link below in this video, and I'll see you at next week's workshop.